CoreWeave just announced a massive deal with NVIDIA, and we also have some interesting short reports coming in for CoreWeave. We're going to look at all this in today's episode, so let's take a closer look.
I want to thank The Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for their subscription service. Now, let's continue with today's episode.
All right, so as I am recording, CoreWeave is up nearly 8%. The stock is sitting at $120. In the past month or so, the stock is nearly up 20%. Year to date, the stock is up nearly 200%. Now, quick, for those that are not familiar, CoreWeave is a stock that I own. It's one of those stocks that I actually have been buying a lot during the recent dip and purchasing a lot during $100 or below. Price target right now, my cost basis is around 91, 92. There's plenty and plenty of videos in this channel, me explaining my bullish takes. Now, what I want to start off with CoreWeave is kind of this NVIDIA news. So today on September 15th, we got here 8K current report filing. Now, there's a lot of lawyer and business talk. So I've actually decided to explain it a little bit better in this presentation. So it's more of a deep dive into this $6.3 billion, what's new, what stayed the same, the business impact, and some of the open questions that we might have as investors. So first, what's new? A fresh $6.3 billion. So CoreWeave and NVIDIA signed a new order form dated in September 9th of 2025 under their existing 2023 master service agreement. Now, what is this order for? The order is a buyer of last resort commitment. If CoreWeave can't sell all its reserved GPU cloud capacity, NVIDIA must buy the leftover, aka the residual capacity. Now, this has a very long runway. This residual capacity backstop runs until April 13th of 2032. So what's that? About 7 years from it. Now, this needs to be materialized. So it must be disclosed as this new MSA is now a considerable material due to the new order's form size. $6.3 billion is no laughing matter. Now, there are some related party angles. NVIDIA is both the GPU supplier, it's also CoreWeave shareholder, and it's also someone who needs the AI market to kind of continue. Now, I'm going to kind of talk a little bit about both the bullish and bearish case behind it. Now, what stayed the same? A lot of things stayed the same, kind of the legal terms, representation, warranties, limits of liabilities, breach, insolvency, terminations, clauses still applied, and the framework is still mainly from the framework of April of 2023. The only thing that's really new is that massive order. Now, why it matters and what's the business impact? For CoreWeave shareholders, the reason the stock is up is it creates kind of a floor. It's a capacity floor. It reduces demand risk. If for some reason CoreWeave doesn't have enough demand, NVIDIA is going to take it up. So it kind of creates this floor and this kind of safety net for CoreWeave. Now, it also improves revenue visibility. In theory, they can say, look, this is the revenue that we are expected to have in the upcoming years, because in theory, if we don't get it from our customers, we will get it from NVIDIA. And it's pretty much a powerful insurance against idle racks. CoreWeave is a massive, massive investor of AI infrastructure. This is kind of an insurance for them to say, look, if I'm going to keep buying more and more GPUs and AI infrastructure from you, but you need to give me some insurance of something, make sure I don't over order. Now, for NVIDIA, it creates two things. It creates a few things. The first thing I didn't put here was, though, it kind of helps create more of a stability for CoreWeave. And CoreWeave now, because they have this utilization floor, they get to be a little bit more aggressive. And hey, look, CoreWeave, NVIDIA, I know you're going to use some of my capacity. If I don't have it, I'm going to buy even more and more capacity. So it continues to have this strong customer. Now, for NVIDIA, this is crucial, right? Because NVIDIA doesn't want there to only be Microsoft, Google, or anybody else. It needs to make sure these other players survive. It also secures extra GPU cloud access without owning assets. NVIDIA, in theory, uses a lot of this AI capacity itself. It can use it for itself or for other customers. So it doesn't have to build the AI infrastructure itself. If there's available capacity, they can just take it up and either use it themselves or probably sell it to someone else. It also, like I mentioned, supports the ecosystem if demand spikes. Now, for the market, it kind of creates a new model. And this is not something that NVIDIA is the only one doing. AMD has also done something like this with their overall cloud partners. Now, let's talk about the bearish case. Is this NVIDIA kind of and CoreWeave kind of being worried about the market? Is this NVIDIA and CoreWeave kind of folding and saying, look, the AI bubble is real, and the only way I can continue to buy AI GPUs is if you provide this insurance? I think it's just that, an insurance. And insurance is great. It doesn't indicate that it's going to be bad, right? But you always want that insurance. And I think that's pretty much what's happening. For NVIDIA, if NVIDIA really believes, and this is unfortunately something that we have to wait, it's not something we can answer now. In 5, 7 years from now, if the demand is crazy, NVIDIA didn't really have to do much, right? They didn't have to do anything. They just signed this contract and they were like 7 years past. Demand was crazy. I just made sure that you felt safe. You felt safe and you bought even more and more chips from me. I created that insurance that in theory, I knew was gonna not even really cost me a thing. So again, if this AI market and this AI demand continues to grow, and we just saw that crazy RPO from Oracle, if those numbers are true, NVIDIA is just signing a paper where they know they don't really have to provide anything back. And it's just more of just, sure, I'll sign it just to make you feel better. But the demand is so crazy that you're going to do well with it. Now, some open questions, right? There are some open questions. And I guess during the upcoming earnings, we're going to have to listen a little bit about this. The pricing mechanics. What are the pricing mechanics? Are they fixed? Are they indexed escalators? Is there a minimum volume per year that needs to kind of go? Can NVIDIA redirect or assign capacity to other users? I believe the answer there is yes. And any service level penalties or priority rules when capacity is tight. So there's a lot of open questions. Again, we haven't heard it, but the market likes it. For CoreWeave, right, this is super crucial because you do have kind of a floor, and it makes perfect sense why CoreWeave investors are pretty excited. We can see the stock is up over 120%. Sitting at $120, up 7%. Now, I understand NVIDIA has other news coming on, but I can see why bears. I understand it. I can see why bears were going to come out and say this is bearish news. But I think, again, it's just an insurance policy. If insurance is just that. It's just an insurance so the person can feel better. In theory, I believe it's not going to be used. And if it is used, NVIDIA will be able to find new use cases for that capacity and use it for internal workloads or for other customers as well. I mean, NVIDIA has that lepton, which is kind of like the Uber of capacity, which is going to allow them to maybe even sell it a little bit faster. So nothing to worry about. Definitely very bullish for CoreWeave. Now, jumping into another story for CoreWeave is there was a short report by Carousel Capital. They actually see the stock could drop by 90%, even more. They have a price target of about $10. The main reason, if we kind of look, is the short seller noted that CoreWeave has transformed in 3 years from a crypto mining outfit in a founder's grandfather garage to a self-declared AI hyperscaler with a $75 billion valuation. Carousel expressed concerns about CoreWeave's customer concentration, with Microsoft reportedly accounting for 70% of revenue. The short seller also criticizes CoreWeave's financial model, saying that a fair value is $10 for CoreWeave, suggesting over 90% potential downside for the stock. Now, this is, in my opinion, when someone doesn't really understand how AI infrastructure works and how the AI market works. CoreWeave is really good at building AI infrastructure at scale, building massive, massive data centers. These massive data centers are mainly used by only selected amount of players. Those are these AI training labs like Microsoft with OpenAI. It makes sense. It's like saying you sell, I mean, I don't know what to say. Like, let's say you make cruises, right? If you make cruises and cruise ships, there's only selected amount of customers that can afford a cruise ship. So those cruise ships are only going to be, the customer concentration is going to be very, very heavy. It's not like you're going to be like, oh my goodness, cruise ships, these concentration is crazy, set at 30%, 40%, 50% from one customer. Obviously, your average Joe is not going to be building AI infrastructure. Even major enterprises are not going to be building AI infrastructure. It's only a selected amount of customers. That's the first thing. Now, CoreWeave, the other thing is CoreWeave has actually received a lot of praise for being one of the best at AI infrastructure build up. They have great reliability. They build systems at scale pretty quickly. They're able to put systems pretty quickly. I mean, if you look at a recent report, CoreWeave leads the way with the first NVIDIA GB300 NVL deployment. They have massive revenue backlog. They have continued strategic partnerships with OpenAI. Their active power is pretty high. They have about 470 megawatts of active power at the end of Q2. And by the end of the year, they project over 900 megawatts of active power. Power is crucial right now in this market. It is constrained. And CoreWeave has one of the biggest AI infrastructure. So for you to believe this stock is $10, I think you just don't understand the market, and maybe you should be following other industries instead. Now, I don't believe CoreWeave will always go up. I think CoreWeave is going to be a very volatile stock, and random news can create a lot of headwinds for the stock. This is what I believe is the biggest CoreWeave fear: is some random news comes out tomorrow that the demand for AI is over, and you'll see companies like CoreWeave, like NVIDIA, a lot of other players see massive downturn, very similar like the DeepSeek moment. Regardless, I am very bullish in the long-term capacity of data centers. We saw the massive RPO demand. We're still in very early innings of the AI space. We're only in chatbots. We don't have AI agents. We're not making full minute videos with AI just yet. We're still in a few seconds. The images are still wrong. We don't have the robotics. Autonomous driving is still very small. Healthcare is still not completely being transformed. The market still has massive amount of tailwinds, and CoreWeave definitely has one of the best infrastructures out there. So I am bullish in the stock, but I don't believe the stock will always continue to rise. I mean, market cap right now is 60 billion. I don't know where this analyst got 75 billion. Maybe it was at this previous high of the stock hitting 170. Luckily, in this channel, we bought at 40, we sold in this uptrend, and now like I mentioned, I'm buying back in this sub 100s, closer to the high 80s and the low 90s. So I hope you guys understand what's happening here with CoreWeave. I personally have nothing to worry about. Take care, have a good day, and see you all next time.